So today is a really good example of why I like individual stocks compared to the indexes. Don't get me wrong, you can make money on the indexes. Futures are a way that I'm sure a lot of people do really well. But I am a big fan of individual stocks, and especially when you get indexes going in the same direction, the whole market's in the same direction, and especially you get a stock like Tesla that can catch some serious upside momentum. When they break levels and then they have bull flag patterns and everything else is kind of pushing, the price action can be really clean. And today is a great example of that. So I want to go over Tesla and specifically trading bull flags once a stock like Tesla has caught a lot of momentum to the upside. But first, let's start with the overall market. So even if we want to go into ES, we had some chop last week, and then today you had a big move higher in pre-market, and it was opening above a lot of resistance. So if anybody is short in this consolidation, you got to think that if we can hold above this, maybe there was a little upside. And then similar situation with NQ. A lot of consolidation and some chop, and then we are clearing out resistance to the upside. If we can hold, maybe some individual stocks as well as the market could get some upside. So starting with the daily charts first, the overall market sentiment first, and then getting into the nitty gritty. So now we'll go into Tesla. And you had Tesla that's been going sideways for a while. You had a nice igniting candle on Friday on some elevated volume, and then you had the gap up, and it also reclaimed the short-term moving average, and then it cleared out resistance to the upside. And Tesla, you also got to keep in mind the personality of this name, right? Like when it can catch momentum, whether it be to the downside or the upside, it can get going a lot further than anybody anticipates. So you got to understand the type of stock you're trading. So knowing that, you had Tesla with a nice gap up in pre-market, nice sideways consolidation in pre-market, just going sideways. And now I was thinking that, okay, if this can get over pre-market high, a lot of times I would take pre-market high breaks, but being that this has been a sell the rip environment, I wanted to watch this get over pre-market high if it did, and then hold above pre-market high. So just knowing that pre-market high was around 260. If we can get above 260, hold 260, and then the overall market is holding up, maybe Tesla can get a little upside because this thing has been absolutely destroyed on the daily, and it went sideways for 2 weeks, and now we're clearing out resistance to the upside. And that's exactly what happened. So if you look at the open, took a little bit of a dip off the open. Buyers stepped up immediately. Look at this big downside wick, and then it got above pre-market high. It even did a little bit of a retest on the second 2-minute candle, but just kind of letting this really confirm. We got a strong opening drive higher. This went from almost 256 up to 263, showing that buyers are clearly in control for the short term. And then this is where sometimes using a moving average can help. I don't make decisions based off indicators, but just getting an understanding, using indicators as a guide, kind of a soft push in the direction in which it's going to see if it still wants to continue to go in that direction. So you get the daily chart lining up, you get the overall market lining up, you get the dip off the open, a big downside wick, buyers step up, strong move to the upside. It is now very clearly above pre-market high. So you see that we are holding pre-market high. It's not a pre-market break. It's already broke pre-market high. And then it does the first bull flag consolidation above pre-market high. Nice strong push to the upside. And then it pulls back to the short-term moving average. I have a 10 EMA. I used to have a 9, but I just changed it to a 10 because I noticed that everybody else had an 8 or a 9, so I just wanted to be slightly different. It's just kind of how I always think. But 10 EMA, and then you get the pullback to the 10. Nice controlled selling. The volume dips down a little bit, and then immediately, look at this candle, an increase in volume at 942. And then you get a nice push out of this bull flag. So here's how I try to trade these bull flags. What I want to do is wait for that pullback. I want to see this hold the short-term moving average, because if this had dipped below it, if this was an aggressive sell-off below the moving average, maybe this could start a reversal. But it holds above it, then you get a little downside wick, and then you get the first green take red right at the moving average. And the high of that candle was 263.12. So trying to get long maybe 263 and then using the low of this candle. So risking about a point. And honestly, it's hard to risk less than that on Tesla because this is a crazy mover. It's different if this was Apple, if it was AMD, if it was Nvidia, even though Nvidia is kind of crazy. Tesla has pretty high ATR, so it's hard to get really, really tight risk. I think if you can risk a point on Tesla, that's pretty good. And then look at this thing take off to the upside. Now, I'm a scalper, so I'm never going to hold for an all-day move, but there's the first bull flag. nice push over pre-market high, holding over pre-market high, the first dip. So thinking that, all right, we are above the short-term moving average, we're above pre-market high. So you think that possible buy opportunities on dips, assuming the market is doing the same thing. Here's the first buy, and then you get a nice move to the upside, and then waiting for the first real pullback to a moving average. I guess you could say that this is kind of a bull flag here, but just a real consolidation. And this is where I see the next setup on the intraday. You get a really strong push, and then as this continues to trend, it's just letting me know when I see this that, all right, buyers are very clearly in control. Until the market turns, let's assume that Tesla can keep going. And then here is the secondary bull flag that I see. So you get the pullback right actually to the 10 EMA. So this is the first time that it touches it. Now it's just about waiting to see, okay, does this continue to hold it? And then it shows that it tried to dip below it, and then you get a wick back above it. And then this is where I like to do the green take red. And the high of this is 268.64. Green take red, right near the 10 EMA. You know, if you want to be more aggressive, I'd say that there's possible buy opportunities here. I'm not that aggressive. I kind of want to see the turn. I want to see the pullback, and then I want to see buyers really step up and then watch a green take red right near that 10 EMA. And then once you get the pop above the high, risking off the low of the candle. So here's an example where the risk is a little bit more, or even the risk off that short-term moving average. So right around 268, because if that were to drop that, feels like it turns as far as the short-term moving average. And then you get a bull flag continuation to the upside. And there is a very nice move here. And once again, I am just scalping. So once I get a strong push and I get, $1, $1.50, $2 pretty quick, that's where I'm just scalping out. But overall, these are some clean bull flags. Now keep in mind, bull flag patterns, if you just trade a random bull flag every single day, it's going to have a very low probability win rate. But when you get those unique instances where the market has a strong catalyst or has some sort of catalyst and it's kind of going the other way than maybe a lot of people are positioned, when you had the NQ and the ES gapping over a lot of resistance, same with Tesla, and then it has that strong momentum drive off the open and controlled pullbacks to the short-term moving average, that's where there's possible opportunities. But if you just go about trading these bull flags every single day, you're going to be really chopped up. But that's why I like individual stocks, because if you combine the overall market with the daily chart and then you combine it with the personality of the stock, you can get some stocks that catch momentum, and when they get going in one direction, the price action can be really clean. Also, earnings season is not too far away, and when you get stocks that are in earnings season and they are gapping up, gapping down, a lot of times they can have that gap and go continuation just because they are now trading on elevated volume because they have a catalyst. And that's also when these bull flags and bear flags can apply, because when you add a catalyst to a stock and it gets going in one direction, I feel like the probability of follow through and continuation is there versus just trading any bull flag in the market, because that's not going to work well. So these bull flag patterns can be very consistent and work really well. It's all about the context of it. And then when it sets up, you see the power of it. You can get some really nice moves. So there was a couple examples of bull flag patterns that worked out really well on Tesla because everything else aligned. And this is why I am a big fan of individual stocks compared to the indexes, because when it comes to strictly momentum trading, they can do really well.